When property prices rise so much, the people there are like, holy moly, I've just made myself a fortune. Let's go sell my home. Of the people we represent. I saw an unemployment story that is remarkable. What a life you guys are living out there. I know nobody from there, but what a life you are living out there because you had double-digit unemployment rates. Double-digit. Where are all the property investors buying? In this episode, I'm going to release the 5 key locations where we are seeing data-driven and big buyers agents all flock to. We're going to give you the suburb by suburb analysis and deep dive into each of these specific locations. Specifically, we're going to go through exactly why these house prices are rising in these locations, and I'm going to teach you exactly how to find it yourself. I'm going to go through the steps I used to find these 5 locations and how you can do the same by spending a couple $100 and about 15 minutes on your computer to get the knowledge that you need to know about where everyone is buying. Curtis, I feel like this one's going to be topical.
Yeah, I'm ready to go.
Am I going to get in trouble?
I got my computer. I don't have a couple $100 though.
Am I going to get in trouble? Hopefully, I do not get in trouble by anyone for releasing this, but I really believe that education and knowledge should be available to anyone who wants it. And it's been the principle. It was the number one thing I said when we first started this podcast. Let's release, hold nothing back. Okay, so the starting point. How do you find an area that is about to go boom? This is exactly what you do. And yes, people will spend thousands of dollars, tens of thousands of dollars to get these locations. And I managed to do it. Obviously, we've got a lot of experience. We spend all day talking to property investors, hear their stories. They educate me. A lot of what I know is from them. A lot of what you know is from speaking to all of our really savvy property investor clients that we represent. This is what they do, and this is what all the buyers agents are doing as well. How do I know this? Because I check the contract of sales of where they're buying, and whoop, like voila, being like, what the hell? They're all the same locations that I found in 5 minutes. It said 15, but it took me 5. I just wanted to be a little bit modest there.
All right, so break it down.
Okay, so this is what you do. Everyone, the buyer's agent industry and the data-driven industry, they are all looking for the same thing. They're looking for hotspots. They don't call it that, but they're effectively looking for areas where demand is outstripping supply. And they're looking for trend analysis where they can see demand clearly rising and supply not rising. So they're looking at a whole range of data metrics for this. The data metrics that they're looking at is days on market, how long it takes to sell a home, vendor discounting, how much of a discount do sellers need to provide when they're selling their home, vacancy rates, how many rental homes are available, asking rents, are rents going up, asking prices to a degree, the stock on market, how many homes are selling in that location, approvals data, how many homes are being built in that location. Basically, they're doing a whole deep dive on all of the key data metrics to assess demand, to assess supply. Now, that sounds really, really complicated. It sounds really, really hard, and it's really, really good for charts and for marketing and for analysis. What do you think?
Yeah, well, a little bit like we said in our previous podcasts, you know, with the potential for AI to do some of these things.
Yes.
It is all very hard unless
a computer
there's a computer that you click a few buttons.
What is this thing? What is this technology? I can do all of this? Wait, what? I thought there was $1 billion industry out there. They also have access to these computers. Okay, so go on this website. Go on these 2 websites. You take your pick. higherthanaveragegrowth.com.au. Hashtag is the name for it. I'll put it in the show notes in the description below for anyone watching on YouTube. Jump on that website. I really like this website. It doesn't give you the hotspots so clearly. It tells you a lot more than that. And you'll need some knowledge and guidance as to how to work through all of the data in there. But if you just want the answer, you just want to skip straight to the end, you can use this other tool called DSR ratios. So dsr.com.au. Again, I'll put it in the show notes in the YouTube comments below. Give you a little bit of an overview here. You go on these websites and, you know, instead of putting in all of these demand metrics, they have it done for you. They've done all the work and they put it into one number, like essentially a score, a demand and supply score. They put in all of the metrics that we just talked about, the really high level framing that I just provided there, that assesses demand for every single suburb, 15,000 suburbs there for you. They check the supply of incoming stock and total listings that are available. They compare it and they give you a score, and they score every single suburb from, 1 to 75. None get to that high in this DSR ratio score. Put it in there. You can also add in yield. You can add in price point that you want. You can add in houses or units. You can add in location. Stick it all in there into a search criteria, much like using Google. You need a subscription for this, I think. I paid $270 just to do it really quickly. Ran the numbers on it, and there you have it. You have it spitting out the very 5 locations I'm going to go through, and I'm not going to tell you any wondrous secrets in this episode that you wouldn't have heard of. Maybe 1 or 2, but I'm not really revealing any secrets. Other people are talking about these areas too because they are doing really well, but this is how they're finding it. DSR ratios and higher than average growth, data tools that are measuring demand and supply.
All right. So do you want to go through our first location? How do you want to cut it up?
Yes. So I want to provide a little bit more context to those that are listening. I want to take actionable, practical insights from this. So if you're listening to this episode and I want to go buy in an area now and you're in that boat, jump on these tools, add in all of your frameworks. Speak to us first, speak to whoever you need to speak to work out your budget because,
that's a pretty key framework. Yep.
Yeah, pretty key framework, right? Work out the yield to your budget. Speak to us because we speak to a lot of our clients and we provide them different yields, under different structures as well. If they're buying company or personal names, it's a very common scenario. Or if they're buying in their personal name and the yield that they need and how their borrowing power changes to their yield. So especially if you're affordability capped and you're looking, make sure you have that information. Put it in your search criteria: price, budget, yield, and the DSR ratio scores and vacancy rates. I think it's really, really important to tighten up that vacancy rate. There's correlation with the DSR ratio and vacancy rate there anyway. So just put in those frameworks and you'll get your suburb list. Can't believe I'm saying that. That sounds so crazy. You can get your suburb list of where everyone's buying just by doing this. And anyway, let's go into suburb number 1. All right. So Curtis, do you want to do the big reveal for this one?
Well, yeah, it's where everyone's buying. Townsville.
Townsville. It is. How many contracts have we seen in Townsville?
I don't know. A lot.
Feels like I've never been to Townsville. Have you been to Townsville?
No, I don't think so. Maybe once when I was like 4, possibly. Yeah. Drove past there.
I looked at a map and I'm like, it's near Cairns, but then then it's not that near Cairns. This is a bit of a drive.
Queensland's big, man.
Queensland is big, right? That's what I picked up through this. I'm like, a lot of these locations that we picked up in these tools, they're actually near each other. So Townsville's the one that we're going to talk about. Townsville has 5, 6 different sort of postcodes. So it's not Townsville's postcode that I'm looking at specifically. It's in and around Townsville's, the center there that has all of the demand supply factors going for it. Yeah, it's doing really, really well. So can you tell me a little bit about Townsville? Give me some of the data insights.
All right,
here.
Let's whip through some of the high-level data metrics and the summaries. So we've got house prices sitting around 670. We've got asking.
That's asking prices, I think. Yep.
Oh, asking prices. Sorry, yep, asking prices sitting
But we've
around.
seen contracts below that, right?
Yep, yeah.
Comfortably below that.
Yeah. We've seen high 4s, I think, even some of them. But yeah, obviously that's going to differ suburb by suburb depending on what you're buying, the house, the land size, a lot of factors there. But asking prices are 21% up in the last 12 months, so pretty strong growth there. Rents are up 29% in the last 12 months as well. Yields are up 4 to 5% in the last 6 months. Vacancy rates 1.7%, historically around 5%. But yeah, kind of at like historical lows for vacancy rates. Yeah.
This is nuts. So what we're seeing here is so much pressure in that market. There's just not enough homes for sale while demand is really, really high and supply can't catch up. This is the fundamental of how house prices rise. Demand rises really quickly or takes time to happen, but there's an increase in demand and supply just does not respond. Yep. That is how house prices rise. It is a basic demand supply curve. It exists. It's the science of property price rises. It's basic economics. Demand is rising here, and it's here in every single data metric that you just talked about. It's strong in the tenant market, which you really need. You need pressure in the tenancy market and the buying market. You have that there. You have asking prices shooting up. You have actual prices up. You have yield high, even though prices are going up, because there's so much pressure in that rental market as well. So that's what we're seeing.
And I think
Give me more.
Yeah, I was just going to say, I think that's a key point is for a lot of these hotspot areas, you're really looking at increasing demand happening in a very, very short space of time. And because it's housing, there's no capacity or very, very limited capacity for supply to adjust. Particularly in a lot of these areas where it's regional, but I would say just as a blanket kind of rule, that's how you get these hotspots is you have a lot of demand coming online quickly and supply taking a long, long time to adjust. And over a 3-year window, supply starts coming along at the end, and that's where things start to tail off. But when the demand's there and supply is at its low levels and unable to react, that's when you get very, very significant price changes in a very, very short amount of time.
Yep, exactly. Can you run me through the rest of
some more numbers. All right, days on market, 32 days on market, which is down from 45. So it's seen a bit of a reduction there.
Yep.
Stock on market's also down 50% since 2022, so nobody's selling. Building approvals are down.
So let's summarize those two.
Yep.
Days on market means that how long it takes to sell a property that gets listed. It's coming down a lot. I just see a downward trend on the curve, which is kind of what you want to see, what all the data people want to see. The actual number doesn't matter so much because some locations take 3 months to sell, while other locations take 1 month to sell in general. But you want to see trend down. It just means that people are fighting over the property. So stock on market, basically there's no homes to sell.
Yep. And building approvals are also trending down. They've had a little bit of a pop up in the last 6 months, but building approvals are down as well, which is probably consistent with a tighter, interest rate environment.
Yep, that makes sense. So I just say green lights everywhere. You're going to see this in all of these 5 locations that we're talking about.
They come out to
green,
the top.
Green spots. We're unpacking the data a little bit for your information, so you can go do this yourself if you don't have access to the tools. Most of our data has come from these 2 resources that we've used here, and SQM Research, and a little bit of ABS as well to feed into our little table that we have here. So keep going.
All right, some of the more negative ones. Affordability is trending in the wrong direction.
Look at this chart. Wow.
Yeah, which makes sense because we have seen prices rise over the last year, 18 months there. So it is becoming increasingly unaffordable. So that is a cross against it.
You can use a few different metrics for affordability. I think the tool here is from HTAG. They use years to own. So it's going to be a function. Affordability metrics are always going to circle back down to the income
and
of
prices,
people. So income and prices. The prices could be rents, could be owning a home, could be time to save a deposit. You can change the prices function around, but it's all a function of incomes as well. Those are the 2 sort of numbers that feed into it. And affordability in Townsville is, it looks like an exponential chart getting worse, which is what you'd expect when you have rampant price growth. We should caveat this is if you'd looked at a 10 or 20 year house price growth chart of Townsville, it's done nothing as well. And another indicator that a lot of the data people love, they love looking at locations that haven't done well. They look at it as long-term, everything reverts to its mean. So by that, I mean that in the long run, most markets kind of get to a 5% growth rate. So if you're below the 5% growth rate, it probably means that it's going to catch up when the pressure comes in. It catches up to that sort of level. So there's more room to run when you look at it like that.
The
it's
only
catch up 20 years of lack of growth.
The only caveat I'd put on that is the more regional you get, the more potentially you're into areas that have fundamental structural changes to their economy. And if they're a mining town and things can change. The more diversified the economy gets, I think the more that return to mean kind of holds true. But if you're looking somewhere that's got a very, very specialized economy, then obviously if it's pumping, then it might be performing really well, but something fundamental might change, and then structurally it's going to be a worse performer going forward. So it's not always just anything returns to the mean kind of thing with a blindfold on.
Yes. With Townsville specifically, I don't think anyone needs to worry that specific economy
is a bit diversified.
It's quite diversified. It's sectors, education, healthcare, transport, retail. It's pretty diversified.
But I don't have the numbers on the classic mining towns like Mount Isa or something, but those ones you don't necessarily have the same, it's going to return to its mean because its economy fundamentally changes from decade to decade. So it's not like it's ticking along and it will eventually get back to kind of where it should be. It has like fundamental shifts.
Yeah, exactly. Oh, and while we're here, let's do a shout out to Matt. So if you are looking for a buyer's agent in Townsville or buying in Townsville and is much more local than us Sydney-siders looking at computer screens, you're probably that person. Let's be honest. You're listening to this. You're probably not in Townsville. How much of our audience is in Townsville? Very few. So if you're that person, but you've done this data analysis, be like, I wouldn't mind some exposure. Like, can I have a little piece of this? Like, that is you. And you're like, can someone do this for me? Find me the right property that isn't flood zoned, wants to do all the work for me, deals with all the real estate agents and finds me a property. We work with someone, this is a little bit unusual for us to do, but he's been a client of ours for nearly 10 years and much more local, and I'd love to give him a shout out. So
yeah.
Matt from IOU Property. If you want great service and you want someone who's really, really good and near enough to on the ground that can actually participate, he's a property investor. Here's the guy I'd go to. He's the guy I'd be picking up the phone if I wanted a piece of Townsville. Are you listening to this and you're like, I want a piece of Townsville?
Not really,
no,
but
okay. Sure.
I'm a bit biased because I work with a lot of our customers. So I finish my day after talking about Townsville like nonstop, and then
talk about Townsville a lot.
Yeah.
So
and
much.
then at 5 p.m. when I go home, I'm like, if someone's like, "Do you want a piece of Townsville?" It's like, I'm tapped out.
So a little bit of context. People come to us and they talk to us. We're mortgage brokers, of course, and yes, we have a lot of competence and skill in that. And we run a large team. How many transactions? We do 40 or 50 deals a month. So that is a lot of people buying property. You know, that's 600 people across the year buying property that we're servicing and working with. That's a lot of conversation. And Kurt deals and speaks to pretty much everybody through the process. And I speak to many of you as well. So that is a lot of conversations. And, much of the work that we do is talking about locations, talking about your stories, talking about why, asking questions, digging deeper into what you're looking for, why you're looking there. It's not just the numbers on your borrowing capacity and lender products. That's not why people come to us. It is not our only bread and butter type of service. We obviously do that. We do that bit well. But it's the education element about why people are buying and the stories. So, yeah, that's why we need to become Townsville experts, and that's why we're doing all this data so we can share commonality with the stories of the people we represent.
Yeah, but
you're not buying there.
Not buying there, yeah. Well, yeah, it depends. Like, I'm always interested in the conversations I have with people that are looking in areas that are totally out of left field. I had a conversation with someone yesterday about, some particular suburbs in the north of Melbourne or something. And I'm like, and no one brings that up. Like, what are you up to?
Hashtag tool.
Yeah.
That's from the hashtag tool, everyone. The northern suburbs of Victoria.
Oh, is it? There you go.
Melbourne. Yeah, hashtag tool. That one. Yeah. I'm having a lot of those conversations as well from many people. People looking at Melbourne, early investors. That's popping up in the data tools as well. So that's a reason. Not one of the 5 that we're going to cover, but Townsville. Let's get back to it. I want to hear about the employment story in Townsville. This is my go-to figure. This is my analysis. The deeper dive. What is driving these areas to change, and what will continue to drive that? Let's go through some of the employment story here. I looked at charts of this from the Townsville website, and I saw an unemployment story that is remarkable. Remarkable is the word to describe it. Imagine all these Townsville people. What a life you guys are living out there. I know nobody from there, but what a life you are living out there, because you had double-digit unemployment rates. Double-digit. Crazy. Yes, something that started with a 10. Not that long ago. Like, you're talking in the last 10, 15 years. 10 years or so. And then it came all the way down to something with a 2 handle. A 2. What the hell? Everyone that was unemployed, every single person would be like, you want a job? You want a job? You want a job? You all get a job. It's like Oprah Winfrey going out there being like, a job for everybody. They did it. They hit some of the best unemployment rates Australia has ever seen. Townsville, little town up north. Obviously not that little, with 180,000 people. Yeah. So big town up north managed to get to what a newly defined full employment scenario from a 10% unemployment. So what a national story this is. Someone should cover this story.
Yeah, it is. And the economy is relatively diversified there, which is the other thing I like about it. So very, very low unemployment numbers, but split across some different industries. It's not just all in one industry. So, education, healthcare, Military, there's a fair bit of government, military spending and operation there. They're expanding the port. I'm looking through it here. They've got a lot of government projects, but then also diversified into healthcare and more consumer demand driven segments of the market as well.
Yep. I know very little about this, but we have a research piece prepared by our analysts behind the scenes, and we have commercial scale green hydrogen production. What words we have here? Commercial scale green energy production. Oh my God, that sounds so good. I'd want to invest in there just hearing that. And we've got solar generation and battery metal refining. So basically, it's been part of the green revolution in Australia. We are an energy superpower. We should be an energy superpower. Townsville is benefiting from that. It's part of the reason why they've had such a miraculous, powerful economic recovery. And that economic recovery is what is causing this price boom. So, ladies and gentlemen, anyone listening to this, Townsville has already very much went boom. Yeah. It's went boom a lot. That super boom thing, that concept that we talked about, Townsville very much is past super boom. It's into freaking Nirvana level-esque, stratospheric level growth. It's already happened. So, will I invest in that? I don't know, because the data's kind of telling you, hey, it's pretty good. I just don't know much about it and how quickly all of this can turn around the other way around, which scares me. So I probably wouldn't invest there. And it sounds like you're in the same boat. Yeah, Townsville. Is that right?
Shoots the lights out of all your metrics. So, if you were having this conversation 12 months ago, then it's probably a little bit more of a no-brainer to allocate some, of your asset base into Townsville. I think the question now is, because it's been so successful, if you were buying in as of today, what's your next 12 to 24 month prospects looking like?
Yes.
As opposed to if you were buying in a year ago.
I'm going to rank these in terms of, so we're releasing 5 either in this episode or in a 2-part series. We're releasing 5 locations that everyone's buying in. Townsville is the number 1 location that people are buying in on this list. It's the most common transaction that we see, or maybe number 2. It's 1 or 2. We're seeing a lot of contracts in these 2 locations. But I'm going to rank it as number 3 for the area to invest in. It is shooting its light out. It is really, really good. And if you're a property investor that wants to do really well in the next year or 2, and you want to buy a bigger regional area, all of our areas are essentially regional, one pretty close to capital, but all of these areas are regional. The data is spitting out regional locations at the moment. So all of these 5 are regional hotspots. But Townsville, I'm going to rank as number 3 on this list of 5 in terms of areas to buy. But it's got a lot going for it. And if you were looking for short-term capital growth, you wanted to buy an area for $550,000 and you wanted to sell it in a year for $700,000, you want to make some money. You want to do it quickly, right? A lot of people should be thinking in that framework. It really helps support your property portfolio. I was there in 2014. I was really looking for areas to just go boom to help me accelerate my property portfolio planning, my growth, and it really helped. Townsville is something that I'd be looking at. All of these locations are, but Townsville is something that I have really high on my list as an area to watch out for. We've known about this for a year or so, I probably would have invested in a year or 2 ago. And the new Townsville, Curtis has revealed it. The new Townsville that everyone talks about now. We get that early insight that I talked about, the early insight where all of those, we said 600 transactions where many of the conversations are now shifting into early, the ones that aren't in the data yet. That's the northern parts of Melbourne at the moment. That's in certain locations in Melbourne. So if you want to buy early in the cycle and take a little bit more risk, then you probably want to be looking there.
Yeah, all right. So you've got Townsville at number 3. Like you said, there's 5 locations. So that means there's 2 in front and 2 behind.
Okay. All right. This one is a little bit of an anomaly. Yeah, let's do another one here. We've got a little bit of an anomaly here, but he popped up in the data set. The reason why it's an anomaly is I haven't seen too many buyer's agent contracts. I haven't seen too many contracts in this location. So bit of a surprise one that's popped out in the data. We've got South Grafton here as number 2. So let's just call it Grafton.
Yeah.
Ever been here, Curtis?
Yes.
Yes, you live near there. You live near there.
Yeah,
Come on.
You got to drive through it. Yeah.
Drive through it to get to where?
Like Sydney.
From?
Gold Coast.
Do you drive through it? Okay.
Yeah.
Cool. Nice. What was it like? You remember? Did you do anything more than drive through it?
I think I was asleep.
Okay,
I don't even think I was driving.
All right, so we got no local insights once again. And unfortunately, we've got no local insights on that one. We're probably not going to have local insights on the other one. But this has popped up in the data set on the DSR metrics. So it's shooting its lights out on the demand-supply imbalance. So it's saying that demand is outstripping supply. But why? Why is that happening? Let's go through the data in this location. I think some people are like, what? What are you, Grafton? Why'd you bring that one up? Like, that didn't pop up in my data set. Read them. Like, let's talk about it. What do you think?
Yeah, all right. So we've got asking prices. Let's just do a quick whip through of how the data looks at the moment, right? So we've got asking prices around 635. Asking prices up 10% in the last 12 months. Let me have a look at the rental chart that we've got here.
You can make it big.
Oh, you can? We've got rents shooting up in the last 12 months as well. Yields trending down in the last 12 months, which...
That's up 4%. Wow.
Yeah. Let's have a look here. Vacancy rates extremely low, 0.8%. So vacancies are very, very low. Very, very tight rental market in the last 6 months. Normally it's kind of over 2%. So historically very, very low vacancy rates, although I don't know how you get that much lower than 0.8%, to be honest. Anyway, days on market is relatively flat. So that's not as positive as, say, Townsville or some of the other ones we might run through. It's a bit more kind of neither adding nor subtracting to its DSR score, I would say. Stock on market is 60% increase in the last 2 years, but it's a 40% drop from 2020. So it's been increasing in the last 2 years, but it's still way down from its pre-COVID stock levels.
Okay, so that's days on market.
Stock on market.
Stock on market, okay.
Yeah. Property on market.
Yep, that's probably not many though.
Yeah, it might be a sufficiently small sample size that it moves around a bit. Let's have a look here. Building approvals are trending down over the last 12 months, so less building approvals. Affordability getting worse, which makes sense as prices rise.
Grafton's got 10,000 people. Oh, maybe I'm looking at a much smaller location. Okay, so that's one thing I wanted to know. Be like, how big is
the
Grafton?
Population size?
Yeah, so we'd have to get in a couple of the locations around it to get a better clarity as to the size of it. So it's got 20 odd thousand people once you include a bigger geographic area around Grafton. So it's a small location. So some of this data could be noisy. Is that fair to say? With
or as you...
Stock on market, that could rise by 5 and be like, cool.
Yeah, materially impacts the numbers.
That's change. Okay, anyway, keep going.
Okay, where were we up to? Affordability has increased, or lack of affordability has gotten significantly worse. Unemployment is creeping upwards.
Whoa! Look at its affordability. It's got the worst affordability of every location here. It's got pretty much the worst affordability of all of them. So incomes, and it's just shot up. It looks like Grafton is at the other end of its property boom.
Yeah, as in the data is starting to tail off a little bit.
Yes, exactly.
Yeah. I totally understand what you're saying. Sorry for all the listeners. We're kind of got our heads buried in charts, so it's a little bit hard for you to see it, but we're kind of seeing that the growth, not just in prices, but some of these underlying metrics. So
holy moly.
What have you seen now?
Holy moly. Yeah, okay. So this data makes a lot of sense because in September 2020, houses were worth $400,000. Now they're asking prices $710,000. Man, we have a client or two. Oh, I'm so happy to see this because this is the first time I've seen it. We have a couple lovely clients who do this sort of data work, and a Sydney sider who isn't on a high income. They're born in Grafton. I think it started with a 2 handle actually. Yeah, it did. I remember. I'm crazy. If you're listening to this, you probably know who you are because you own in this location, and you must be singing all the way to the bank. That's awesome. You could almost pay off your home from this. You would have made what? You would have 200%. Like you're probably selling that same property 500, 550 now.
Yeah.
That's amazing. What a great story here. So I'm looking at all of this data for South Grafton and I'm seeing it's past its peak, but it's shot, it's lights out.
Yeah.
Is that right?
Yeah, I think that's a bit of a summary. And
don't invest
when
in
you
Grafton,
are using the DSR tools, it does it shows you what's hot, but it doesn't necessarily give you a very, very good steer about where each location is on the cycle, if that makes sense. So it can produce locations that are maybe more on the start of their boom cycle, but the same data metrics can also highlight locations that are maybe towards the end of their boom cycle. So that's something that diving a little bit deeper will help with, because that's probably a little bit of a difference going through the numbers for Grafton. When we do a bit of a deeper analysis, it's like, maybe that's towards the end of its rise.
Yes.
Whereas Townsville might have a little bit more to go. Yeah.
Mid, I would say, yeah. One of the employment stories is North Coast, New South Wales, unemployment has been on the upward trend recently as well. So Grafton is an area that has done really, really well over the last few years. You just saw that in those two numbers. Like that price growth is enormous inside 4 years. You're talking 80% price growth for houses in 4 years. That's extraordinary. That isn't really talked about all that much as well.
Yeah, it goes under the radar.
It goes under the radar. Anyone that's done and bought there would have done exceptionally well. It's on the back of falling unemployment. But now, because of that rise, affordability is really, really poor. And because of that really, really poor affordability, it takes 39 years for anyone to own their own home there. With rising listing levels, rising stock on market, you expect this. When property prices rise so much, the people there are like, holy moly, I've just made myself a fortune. Let's go sell my home. That's exactly what you think. It's what I think. If someone came and offered me double my value for any of my assets, I'd be like, oh, cha-ching. I want the cash. I want the cash. Like, that's exactly what people think. So that's why you have these property cycles that happen. So after an area shoots its lights out, stock on market begins to rise because people are like, cool, it's time to cash out. I've made myself a fortune. Maybe I want to go live out near the beach. Is Grafton near the beach? No.
Close enough.
Maybe I want to live on the beach. Maybe I want to go up to Goldie. Like, maybe I want to be in the main town. I don't know. Like, I want to do something different. I want to get out of here because I made myself a fortune. And I never had a fortune before. Now I got a fortune. So, this is what happens. And the property cycles begin to turn. So the great bit of this analysis is we've identified a location that the data hotspotting spits out at. We've gone through it and done the trend sort of work, used H-tag. So I would say buy both tools. If you're a serious property investor and you want to go buy things on your own and you want to, avoid yourself 20 grand in fees or, thousands of dollars in courses and stuff, just buy these two tools and it'll give you a lot of knowledge and understanding. It'll tell you to take a look at this location. It'll also tell you to be like, I've looked, but not for me.
Yeah.
So I'm going to rank this number 5.
Number 5. All right.
Number 5.
And I think both of our instinct was we would not be trying to buy in Grafton right now. So that means we've got
I'd be selling. Actually, I'm going to go further. Many of these locations, I've had so many conversations with so many people. People get told the same thing over and over again, and we probably have exhibited flexibility. It's something that I hope people could take away from some of the messages we talk about. We change to the information that is in front of us. Rates, we talk about economy, we talk about property strategies, we talk about different lending policies. But one of the things that I actually think is if you've bought in a location and it's shot its lights out and it's showing you all these data metrics, take your money, take it out. Like, you've made your money. I'm not saying it's Bitcoin, but it is a bit like Bitcoin. Take your money, get it out of there and being like, it's time to sell. Yes, hear that again. It's time to sell. Just because you've bought a property investment doesn't mean you need to die with it and have it ingrained on your cemetery. A lot of people think that you need to go and do. I bought in Grafton. No one gives a toss about that. You shouldn't either. Sell that property investment, particularly if you have owner-occupier debt. Clear that owner-occupier debt again, and you're a whiz. Yeah. I'm talking to this particular person right now on camera. If you bought in these locations, if you can identify that Grafton was going to do so well and you bought in freaking 2019 or 2020, whenever you did, And you're a whiz. Use your skill, back yourself, and go find the next Grafton. You'll make yourself a fortune.
And pay off your owner-occupier while you're at it.
Exactly. Clear off your owner-occupied debt. We have such an aversion to paying tax. We think paying tax is the worst thing in the world. The last person I want to pay is the tax office. That's why a lot of people say never sell, or they've heard some idiot talk about it on some podcast. Never sell, never do this, never do that. Any sort of never buy units, only buy this, blah, blah, all these sort of generic nonsense. It's being sold to you. Property investing can be formulaic and it can be looking broad, and it changes. It changes different directions depending on where the opportunity is. This is a classic example of it's time to sell. It's time to get out. Sorry, anyone listening in Grafton, I don't think you should sell if you want to live there. But if you want to ride the capital growth wave, sell and, move the money somewhere else, maybe in one of the other locations that we reveal in our next episode, Curtis. Should we leave the other 3 for part 2 of this deep dive?
Yeah, that sounds good, which is going to be location 1 and 2 of your priority list. 1, 2, and 4. 1, 2, and 4. Yeah, I think that's right, because I've got the number 1 location is where most of our property investor clients are buying right now. They are swarming all over this location. It's a group of locations. We're going to call it a group. It's a very big part of Australia. It's a gold mine of opportunity. We're going to reveal that location. Won't be a massive surprise to many people, but we're going to reveal that location and 2 others. Maybe you're going to show Darwin some love after trashing it on previous podcasts.
Matt, we've done a little bit of data work on Darwin, and it's scary. But our associate keeps saying to me, be like, "Hey, Rita, what do you think about Darwin? What do you think about Darwin?" I'm like, let's take a closer look later. We'll be doing more YouTube videos on that. For those that are listening and watching on Spotify, we are releasing 3 or 4 YouTube videos every single week now. We've got hundreds of subscribers jumping online every single week. It is a gold mine of information and education. If you're not there, check it out. You'll get some of the charts. You'll get some of the research. It'll be a little bit more interactive. You'll get a lot of value out of it. So, jump on YouTube. I think it's called Australian Property Talk with Freedom, where I deep dive into these suburbs with the data, with the charts, with the analysis, and share all that knowledge with you. Until next time, Curtis, been a pleasure.